Morning, Drew. Daba Namona, very good morning to you, and welcome to this morning's online business briefing brought to you by Business Advantage PNG. My name is Andrew Wilkins, and I'm going to be your host this morning to discuss the economic and business outlook in Papua New Guinea for 2021. Before we start proceedings today, I'd just like to acknowledge the sponsor of this morning's session, that's KPMG. Our sincere thanks to Zani Thuron and her team in Port Moresby. KPMG's support for this event enables us to bring it to you free of charge. So our sincere thanks to them. So welcome one and all. We have participants and attendees from all over the world joining us today, not just from Papua New Guinea, but from the European Union, from the United States, from Japan, from across the Pacific. So there's a warm welcome to all of you this morning. We're going to have three components to today's session. In a moment, I'm going to be having a conversation with Ilyas Sarsenov, who's the country economist for Papua New Guinea from the World Bank. After that, we're going to have a conversation about some of the challenges facing business this year and what the opportunities might be. And then finally, we're introducing a new segment into our event, which is the Inside View, we're calling it, which is a specific interview, one-on-one, with one of PNG's business leaders. And today that's going to be Cameron Mackellar, who is the CEO of the Brian Bell Group. So, first of all, let's talk to Ilyas Sarsenov. What I wanted to do for you today is to give you a snapshot of what the economic indicators are for PNG as we enter 2021 and some of the key challenges. So that's what Ilyas has prepared for you this morning. Don't worry if you can't jot down all the charts. All those will be made available to you afterwards, and we are recording this session as well. Just a couple of pieces of housekeeping before we roll that interview. There's a chat function, a Q&A function at the bottom of your Zoom screens. If you have a comment or a question that you'd like to pose to one of our panelists this morning, please feel free to use that. And finally, just to draw your attention to a new service which we've just launched in Papua New Guinea, the PNG 1000. This is an online business database of business and service providers in PNG. It enables you to locate the people you need to provide you with the service quickly and without fuss. And it also provides businesses with a platform to promote themselves to other customers as well. So if you want more information, png1000.com is the address to go to online. Okay, now let's roll to our interview with Ilyas Sarsenov from the World Bank. Thanks.
Good morning, colleagues. I would like to express appreciation to Business Advantage PNG for inviting the World Bank to present our latest PNG economic update. This time we named it Dealing with a Triple Crisis, and I will explain why. In my presentation, I will try to cover three areas. The first one is looking to the past in 2020, then looking to the near future for 2021, and then providing some longer-term perspective as well. So first, on the immediate past, we all know that Papua New Guinea faced three crises, and these are the COVID-19 health emergency, and economic contraction, and political turmoil at the end of 2020. So although we describe them as they are in the past, they will continue affecting lives and livelihoods of Papua New Guineans in 2021 as well. Although on the economic side, we will see a rebound in growth in 2021, but it's a technical one. So the health emergency issues will continue with recent surge of COVID cases in Papua New Guinea. We expect the curve to continue rising. Then the economy will be smaller compared to the pre-pandemic forecast of ours, and I will describe it further in my slides. And then political uncertainty and fluidity of the political situation remains a concern. So let me turn to the 2020 picture first and provide an overview of the regional economies, large regional economies first, and then make a linkage to the case of Papua New Guinea. In the first slide, you can see that many key trading partners of Papua New Guinea and large economies in the East Asia and Pacific region experienced a downturn in 2020. You can see these red bars all in negative in the negative area, except for China. But even China experienced a substantial downturn compared to pre-pandemic growth forecasts for that economy. Papua New Guinea is not an exception here. On the second graph, you can see that growth in 2020, both the resource part of the economy and then non-resource part of the economy both experienced a contraction in 2020. And this was due to external factors, as in the rest of the world, but also domestic factors as well. So on the external side, certainly the COVID-19 crisis affected global demand and key commodity prices for goods exported by PNG were affected, with negative spillovers to the overall aggregate demand in the economy. As far as domestic factors are concerned, certainly a government's response to COVID was similar to many other governments and affected economies as a result, but also the government's decision to re-enter in some renegotiations in the resource sector, especially on Porgera mine, but also some delays with the agreements on new projects did affect the growth outcome. According to our estimates, GDP growth, total GDP growth, or the economy contracted by 3.8% in 2020, compared to 2.9% growth that we estimated before the pandemic. So you can see the magnitude of the downturn. It's almost 7 percentage points that the economy experienced last year. And if we consider Porgera impact, the effect was 1.5 percentage points out of 7. So not a major one, but a significant impact as a result of that.
Ilyas, just on Porgera.
Yes.
Do we have a dollar amount or a kina amount that we can set that against? How much is that in actual dollar or kina terms, that percentage?
Well, according to Barrick Gold, which provided these estimates, I think $3 million US dollars a month were a loss to the government of Papua New Guinea. So if we put in the overall revenue context, it would be 1 percentage point drop in revenue in 2020. So looking beyond the economic impact, but government financing were affected not just by COVID-19 crisis, but also by some decisions made last year. But hopefully in the future, with more beneficial terms for Papua New Guinea, there will be some gains in the coming years to see. So yeah, we will need to come back and reestimate what was the overall impact of these decisions vis-a-vis gains that the government is expecting to receive in the near future. Yeah, thanks. So I'm not going to talk much about the past, because I'm sure this audience is more interested in what will happen this year and probably in the coming years. So again, I decided to put Papua New Guinea in a global and regional context. And here you can see growth rates for the world economy, but also for key economies in East Asia and Pacific region, including Papua New Guinea. And in this table, I try to show that this rebound in 2021, and we are talking about 3.5% growth in case of Papua New Guinea, is a technical one. Although it is higher than what we estimated pre-pandemic. You see in the green column the estimates made a year ago. So estimates as of now are higher for the world economy, for the region, and for Papua New Guinea. And again, this is a technical rebound starting from a very low base, which was negative for many economies except China, I guess, and Myanmar in this case. But if we take to 2020 growth and 2021 growth numbers together and average them, then in the case of Papua New Guinea, growth would be close to zero. So it is in contrast with our pre-pandemic estimate of 3% growth on average. So that this triple crisis was a significant impact on the economy of Papua New Guinea. But then looking beyond the current year, in 2021, we expect the economy to continue growing at a relatively high pace, assuming that the existing and new resource projects come online or resume production, and then the construction phase related to the new projects will be contributing to growth in the resource part of the economy, with positive spillovers to the non-resource sectors as well. And however, if we look at the kind of pre-pandemic and current forecast picture, and this is the first graph on this slide, you can see that the trend is different this time compared to our forecast a year ago, and there was a shift in 2020 due to the COVID-19 situation, and we estimated that the economy of Papua New Guinea would be 9% smaller in 2023 compared to our pre-pandemic forecast without a shock. So this shock was substantial for this economy, and we estimate that the construction boom, the new resource projects will continue supporting this economy, hopefully with potential spillovers for the non-resource economy as well. At the same time, we do expect and we do see government's commitment to resume fiscal consolidation. This is the second graph, because the government has to take into account the below trends developments, the economic growth of this in Papua New Guinea, but also the upcoming boom requires some counter-cyclical measures. So we observed more spending last year, and more spending will be done by the government this year. But at the same time, it contributed to higher debt to GDP levels for this economy, and to maintain, but also to ensure fiscal and debt sustainability. There is no way but to start living without all means, as the government, and previous government, the current government claims it should be doing. And therefore, we will see in the coming years the government trying to improve the revenue situation and probably streamline, but also improve efficiency on the spending side of its budget. And my last points would be on the KINA, because I'm sure this audience would be interested to understand what is our current take of BPNG policies and what should be done in the future to if an adjustment is required. So the first graph represents KINA depreciation rates in nominal terms. However, if we recalculate this trend in real terms, then KINA appreciated last year. So this is not good news for the non-resource economy and its competitiveness, as we understand. But the Bank of Papua New Guinea continues to implement its tightly managed exchange rate regime. And in fact, at the end of 2020, there was no depreciation due to substantial loan proceeds from the government of Australia and the Asian Development Bank in the form of budget support operations. So there was no depreciation at the end of the year as a result of it. However, if we exclude these loans, the loan from the government of Australia and 3 loans from the Asian Development Bank, then on the second graph you can see that reserves increased, but without them they would be on decline in line with the imports trends, because import was going down since 2019, indicating that the non-resource economy has been experiencing problems, not necessarily with COVID, but also with overall sluggishness of development in that sector. And KINA was one of, or KINA overvaluation was one of the factor leading to that. And so last year, we, with the real appreciation of KINA, we assumed that KINA remained overvalued, and it was confirmed by the IMF as well. Looking forward, we know that the IMF has a staff monitored program with the authorities, and one of its elements is to make the KINA more convertible and flexible in the future. So we do hope that in the future we will see more adjustments of the currency, so it can absorb external shocks better in the future. So that's what the ultimate goal of these policies should be.
And my sincere thanks to Ilyas Sarsenov for providing us with that update, and also to our friends at the World Bank. The World Bank has been a valued partner of ours for many years at Papua New Guinea, and it's a pleasure to work with them. Now I'd like to open up the conversation to our 2 panellists today. Douveri Henao, who's the Executive Director of the Business Council PNG, that's the peak body representing business interests to the country, and particularly articulating those interests and concerns to government, and also Paul Barker, who is the Executive Director of the Institute of National Affairs in PNG, which is a privately funded think tank. Welcome to you both, gentlemen.
Andrew, thank you.
You, Paul, you with me too?
Good morning, Andrew, and your participants.
Welcome both. Douveri, let's start with you. What are the major concerns moving into 2021 for the business community as far as you can see?
Again, just capturing on some of the thoughts that Ilyas provided. He identified 3 issues that were pertinent in 2020: COVID-19, economic contraction, and political turmoil. But I'd add another one, and that is government policy. While COVID-19 responses could be excusable because it's something we've never faced before, what probably cannot be excused is the way in which critical projects were delayed And again, that really came down to government policy. So part of that contraction, economic contraction that occurred, government policy was a major source of that, apart from the general market conditions. But moving on to 2021, at our Prime Minister's Back to Business breakfast, we identified, or through our president, she identified three critical areas that we will be engaging heavily with the Marape vassal government, and that's looking at a rescue strategy for the market, that's looking at a recovery strategy for the market, and also a rebuilding strategy. So to look into 2021, I'll just give some highlights on what those three strategies are from our perspective. First of all, there are some sectors that have absolutely no hope on recovering. They've bled out in 20 and 2021. They're probably going to vanish. So there needs to be some form of rescue strategy. If the ships aren't coming with the tourists, the planes aren't landing with the tourists, we still need a tourism sector, and that particular sector, it does need a rescue strategy. I've spoken to a number of tour operators, hoteliers across the market. They have made the adjustments, several of them, while the large majority of them have simply dried up. So that's a sort of conversation that we need to start looking at, defining a rescue strategy. And probably just moving on to the recovery space. Again, adjustments have been made, just sticking on the tourism sector. A classical example is some of the dive resorts that are not getting the international tourists on board. The dive masters have become gardeners, have become landscape artists, just to keep them on. But unfortunately, that recovery strategy does need some boost. Spend a lot of our energy exploring and defining what that recovery space is. And then finally, on the rebuild, big ticket announcements made at the breakfast after Prime Minister's little hint and tickle about Papua. The following week, we had
This is the Papua LNG project. Yes.
That's correct. So that teaser he gave, the following week, he followed up with a signing on the fiscal strategy with the government, and of course, we're all waiting for the real serious stuff, which is the feed agreement. And so the rebuild is definitely looking at not only foreign direct investment to kickstart, but also, I think more importantly, domestic investments. There's been a lot of capex that were on hold across the market from large businesses. We are getting some word that those capex investments are now coming on board this year, so that should put some good money into the market and jobs. But above all, Andrew, the critical thing for us is job retention.
Right.
If we could do the rescue, recover, rebuild, and just keep the mom and dads employed, that's really where we'd want to have a robust conversation with government. I think the final thing I just want to add very quickly is there has also been a major shift in the government dialogue space. And I largely credit that to the appointment of Ambassador Ivan Pomelu in the Prime Minister's Secretary, as the Prime Minister's Secretary. That change has given, especially my council, the opportunity to dialogue with him frequently and to have some oversight on government policy thinking. So that so you can expect from us frequency on engaging with Ivan, and at the same, by default, we would have appreciation on government policy thinking, which was not the case at least for the past 5 years. So we're actually thankful for that change, and also the willingness of the Prime Minister to allow us to have those engagements with his department frequently.
Noted. Paul, I might bring you into the conversation now. I guess the Marape government survived the political scare at the end of last year, and who knows, there may be more fun and games politically in the April sitting in Parliament. It's hard to predict that. But in the meantime, the Marape government's reform agenda is the only agenda in town. What do you see as the key planks of that reform agenda as far as they're likely to appear this year?
Okay, well, clearly, as indicated earlier, we do have that COVID scenario that's hanging over us. And so
Yes.
I would say that last year, to the credit of the government, one of its best moves was actually to close the borders early and to have enabled PNG to live relatively normally last year with respect to the virus. We are seeing the numbers picking up now, but it was retained in a better situation last year, albeit that the economic stimulus package that was put in last April was largely expected to be funded by the banks and the superannuation funds, rather than actually by much in the way of government stimulus. And the money that did go into the government stimulus package was a rediversion from a range of activities, including those major projects that Douveri just mentioned. And one has to say that a lot of that money, it's a little difficult to see where it actually went out to the districts, didn't really have very much impact because those district mechanisms are not very accountable. We don't have statistics, data, the mechanisms that developed countries have in terms of job seeker, job keeper type programs and mechanisms to support the private sector. So it was very much, yes, a 5.8 billion Kina package, but basically you have to go and fund it yourselves, boys. So that was a challenge. And whether we can do something differently this year, clearly we need to make sure that one way or another, that COVID doesn't disrupt the whole ball game, because simply there's no capacity for the state to provide the sort of interventions. So we have to make sure that livelihoods are sustained, people can continue their economic activities while trying to sort of restrain viruses. So yes, we were badly affected by global markets, etc. last year. The global markets have been picking up for a number of reasons. Several of those commodities have been picking up, which is giving us a little bit of a boost. Obviously, the oil and gas have picked up and so on. But some of the agricultural commodity prices have improved a little bit as well. But in terms of the reforms, well, we've seen, we have the ongoing reforms around Take Back. Now, Take Back, yes, that's, aspects of that are a good concept. Yes, you do want to make sure that you're getting the best benefits from your resource sector. But if you chase the resource sector players away, you're not going to have too much to share. And I'd say that across the board. If Take Back means taking away other businesses rather than growing businesses and growing the economy, then you're not generating the job growth, which is the most important thing. We've had almost static and sometimes negative job growth over the last decade. And one of the most important areas, we've got a, whatever it is, 2 to 3% population growth rate, growth of numbers of people wanting to enter the workforce. We have a very inadequate level of schooling and tertiary education. And we have all these people coming out of schools or not schools and colleges and wanting to gain employment. The non-resource sector has been sluggish, but the formal sector has been flat, sometimes going backwards. So the critical area is to get investment and jobs being generated, rather than just thinking about how can we change the ownership of the pie. And that does mean trying to encourage PNG businesses, enabling them to have all the opportunities that they need, trying to address the impediments to those businesses, but also encouraging foreign direct investment to occur. And of course, in that package, Ilyas was highlighting the issue of foreign exchange. That has remained one of the big impediments to a lot of businesses. And I'd have to say, yes, it's good to see the Papua LNG and positive moves on Wafi Golpu, and these have been announced. But one has to say, yes, those resource sectors are very nervous about mining legislation, petroleum legislation. They need to have those assurances that they can gain an adequate return on exploration and development. But also, while things like Porgera are still hanging over us, this is a logical, it's illogical that it's closed. It's been closed for now getting on for a year. And yet that's during a time when we've been short on foreign exchange, when gold prices have been to $2,000 an ounce, and the state has been losing out on revenue. 3-something thousand jobs have been lost. Contractors have missed out. We've lost foreign exports, which implicates foreign exchange. So, and yet, everyone is a loser, including the landowners. And now some sort of deals have been struck, but no one seems to be moving fast, because it does involve the government having funds to participate in that arrangement. But while that is still hanging over us, it is a pretty big discouragement for further major investment in the resource sector. So we've got to make sure that we address that one quickly. And obviously it's not going to fix everything, but it's a crucial part for reopening the economy, for particularly all those contractors, everyone up and down the whole highway, but also for further investment. And we must recognize that all those new projects, although, documentation, it has started to be signed, and as Douveri highlighted, we have to move on to feed and so on. It's some time down the track before you actually see the benefits. I'd have to add that when the benefits do start, we did hear the CEO for Total saying, well, look, and it's not going to be till 2024 and plus before you start seeing any exports of gas and so on. But we must remember that the major developments for the first X years from a major resource project are not from exports. You don't see very much benefit once you actually start exporting for several years. The major benefits are during that 3-4 year construction phase, when there's a big boost to the economy, but which you have to manage, because you have to avoid negative implications on other sectors from that.
Just on that, and I think there's some suggestion the government's claiming, and these figures may be approximate, around $65 billion of future investment in PNG just from the Papua LNG project, the Wafi Golpu copper gold mine, and the smaller Twinza undersea gas project. In the meantime, Douveri, maybe get your comments on this. We are waiting for that private sector investment. The government has a role to play as an investor, and it's outlined its particular focus, I guess, on infrastructure. We've had the Connect PNG infrastructure program, which is about building roads, ports, and other connecting infrastructure. And also the development of special economic zones in the Ihu, the Gulf province, which is starting to get off the ground. How important do you see this year the government investment in these?
If I can just come back in there first.
Sorry.
The first issue is we have to maintain the infrastructure that we do have. So yes, politicians love rolling out major new infrastructure, and particularly when you're coming into a year of an election in 2022, rolling out or committing to major new infrastructure is very appealing. But if you don't actually maintain your existing infrastructure, and that is the Highlands Highway, of course, other existing highways, but also those feeder roads, because all around the country, it's a major impediment to agricultural producers that they simply cannot get their produce to market, and they can't get it to market in a state where it's sellable in a speedy time. So these are major handicaps, and this is the majority of the population. So just a word of caution. We've been saying it for years that maintenance only gets about 1/10 of the budget allocation that it needs at the national and local level. So maintenance, and restoration and upgrade before all the grand, and some of the grand projects that are being pushed. One has to say, we have to be very careful about the nature of the financing of them, because some of them, including, it appears, the latest hydro project for Ramu, look as if they could be financed at a much more competitive cost. And if you end up with an excessive burden on the cost of your infrastructure, then that has to be carried by all the users, including, of course, the power company. And many of these state-owned enterprises are, technically insolvent, and they need to sort of be restored. And reforming the state-owned enterprises, it has been a priority of the current government, but reforms have to really move ahead in the whole areas of competition and in making those state-owned enterprises accountable, with professionals managing them and so on. I mean, PNG Power, I'm told, has lost about 100.
Well, I just stop you there.
Yes.
Yep. I just stop you there and just bring Douveri into the conversation on that point about the development of infrastructure.
Thanks, Andrew, and agree with Paul's sentiments on the OPEX, on the national budget ledger that needs attention. What we've tried to do in the Business Council is, first of all, look at the expansion opportunities of these CapEx budgets, both at the national budget level and as well as at the state-owned enterprises. And the narrative that we've been pushing is, for example, in the PEP as well as the PNG Ports Master Plan, huge commitments being made by development partners and even domestic financing from their books. Can you get the right investment where you're going to create the big bang for buck growth? And that's been the type of conversation we're having, especially with PNG Power. You've got a gift, but if you invest in the T&D transmission distribution space, it's a most likelihood that you're going to replace 50% OPEX that has been pumped into generators and fuel. That money can go directly to PNG Power if everyone gets on the grid. That's basically the message that we're telling PNG Power development partners, that you've got the right idea of investment, but perhaps slow down on the generation side and go heavy on the transmission distribution uptake. Again, similar to PNG Ports, there's a variety of projects that have been coming in the media space, but is that really going to yield the growth, or is that investment going to be a ghost? So it's that sort of dialogue that's happening in the market right now. And one thing that we're quite thankful is the SOEs themselves are now beginning to have professional managers, both at the senior management levels as well as the board levels. That's one thing that I do give credit to the current KCH drive, and it's been in the making for a number of years. So you can't give one minister or one MD the credit. But what we're seeing right now is highly intelligent management team sitting down with business and saying, we know what the problem is. Where should we direct our investments? So much of that dialogue is taking place at the SOE levels. However, we're yet to see that conversation happen, for example, with the Department of Works and PNG Connect. What are those lifeline highways that if you do put a fair bit of cash into that, will the products actually make it to the port and generate the growth cycles? So I think this year, while there is that blood rush to throw money for election purposes, it's also an opportune time to sit down and say, if we understand that this is the norm, but if you put the investments in X, Y, Z, you're going to have the growth areas occurring. So much of our engagement with Waigani and as well as the SOEs, it's targeted, it's specific, and again, the narrative's becoming very clear. So we're hoping to go to market and to the public. If you do 10 investments in this space, this is the growth cycle that's going to occur. And so we want the public to have a cause and effect. If it's not in that type of window, that type of thinking, then you need to question whether this investment is valuable or not. And again, that's a sort of demand that we're seeing from not just within business, but also from the public. Can you connect the dots? If money is pushed in there, will this growth happen? So I guess the upside to a year out of the elections is everyone's aware of the blood rush, but everyone's also aware that can you make it more clever and smarter?
Noted, Douveri. I'm conscious we're moving ahead with time, so I might finish the conversation with both there, and thank you for the moment. What I'd like to do, though, is play you a conversation I had earlier with Cameron Mackellar from the Brian Bell Group. Brian Bell Group's been established in PNG for many years, mostly in the retail space, but also has other interests in property. And the reason why I wanted to run this conversation with you this morning is just to indicate that while there are challenges in PNG, and that comes inherently with a higher risk economy, shall we say, there are certainly businesses in PNG that had record years last year, and Brian Bell Group is one of them. So with that, I might ask Andrea if you wouldn't mind just rolling that conversation with Karen. So, how was Christmas? How is your business travelling?
Yeah, we had a fairly extraordinary year last year for all the reasons that we've just talked about, really. But from a trading perspective, it was actually one of our best years ever.
Wow!
That 2020 was year 2 of our 3-year business plan. So lots of things were, previously established to be put in place, come to fruition or deliver, on certain things, particularly, capital projects and the like. So as a consequence of that, we brought online the apartment block down on Ella Beach, and we finished our development at Gordon's, which was, obviously upgrading our home centre business there, as well as, developing a shopping centre that, now housed 21, 22, independent retailers. So all of those things lined up really well for us. It was probably both projects, as always, were a little bit delayed in final delivery, but ultimately they helped contribute to a really strong year last year. Christmas was spectacular in every sense of the word for us, particularly on the home centre side of things. We significantly overachieved against our preconceptions and budgets to the point where we delivered a record profit for the group.
That's fantastic, and I guess that contrasts with some of the maybe more business to business activity that's been going on in the economy. You would consider your businesses to be effectively essential retail services for ordinary Papua New Guineans. Is that was what kept you going over this period?
Yeah, I think early in the piece when the government made it fairly clear, the SOE made it clear about, what was essential and otherwise. It was a bit of a blurred line, I guess, with us. We considered ourselves essential, and to their credit, they supported our continued opening through the lockdown periods and the likes. And that was important for us, for our team members, first and foremost, but also to be there to support communities and loyal Brian Bell followers at the end of the day, whether it be, to provide batteries or lights or solar or, whatever it might have been, just to get them through, the period of uncertainty. Our business, Andrew, is in two parts, as I've probably discussed, previously with you, that, circa 50% historically has come from the corporate accounts and 50% from consumer accounts certainly in the home centre side of things. That changed dramatically last year, where the consumer percentage grew quite rapidly larger. In fact, the largest percentage that we've ever seen, which meant obviously a fall away from, corporate customers as well, which was, of course, expected. But we were very pleased that whatever we lost from the corporate side was more than made up on the consumer side. So very pleasingly that, there's clearly cash in the economy here, and, we saw the better part of it, spent with Brian Bell.
Are there any particular categories that were stronger performing?
I think all of our categories performed reasonably well. There were some that were better, of course, than others, but I think overall my comment about that would be the value end, as opposed to a category, it'd be the value end of spend. So we've got, the old adage about good, better, best in our range, best being probably the more premium, expensive, types of products in our business. But increasingly we saw a real push toward the value end of things last year. So, everything was about value across every category, really.
So that's very interesting. So people are still looking for a bargain, but they're still buying if the price is right.
Yeah, very true. So things, and you'd equate it to something like in our business, Fisher and Paykel, from a white goods perspective, is seen as a premium product. Those sales would have really tailored off quite dramatically last year, but brands like Integrity and Star Vision and others, which are more house brands and value proposition, products, they went exponentially well for us.
What about business outside of Port Moresby for you?
Really solid. I was concerned, I think, probably halfway through the year about, whether it was going to be a bit of a two-speed economy in Port Moresby versus the rest of the country. But pleasingly, Andrew, across our business last year, we had reasonably record growth numbers across every region that we represent. So it was consistent and a strong outcome across the board.
We mentioned briefly two initiatives that you took on last year. One was the apartments and the other was your Gordon's shopping centre. Are they helping you to diversify your business or maybe balance the revenue where it's coming from?
Yeah, I think probably balance is probably a truer word, because whilst we do always look to diversify, we've got three sort of core elements to our growth strategy. One is from the core. So, the home centre, the trade electrical, the chemicals and property divisions, of course. The other is, potential acquisitions. And the third is startup operations. And we did a couple of those last year as far as startups go. One was at Gordon's, we started up our own garden centre. So instead of, seeking a third-party lease or company to come in and do that, we decided to do it on our own. We've also partnered late last year with Phonehouse, and we're doing some concept stores. Well, actually one at the moment in Goroka, where Phonehouse are, establishing, a phone operation within Brian Bell Home Centres. So that's another startup venture that will eventually, I imagine, will roll out to other, regional locations once we've got the model, right in Goroka. But early days, it's doing very well for us. On the acquisition front, we looked at a number of things over the last sort of couple of years, but nothing to date has really, come to fruition. Certainly some interest, but, nothing to date has been finalised.
So looking ahead to 2021, what sort of year are you expecting? And are there any new initiatives you're planning for this year?
Yeah, there always is new initiatives, of course, new capital projects and the likes. I guess, answering your question first, we are expecting growth. So we're fairly bullish with our growth targets. They're just under double digits for this year. But it's buoyed with, we see this being a more normal year. What I mean by that is that, we're not anticipating that we'll have, 3 or 4 months of sort of lockdown interruptions.
Yes.
Therefore, if you normalise that, from last year, you'll actually get, close to double-digit growth this year. So that's sort of part of our thought process as to why we're certainly aggressive with our growth strategies. The other one is we have recently completed our first stage of building a new home centre in Mount Hargen. So we built a large warehouse facility last year, completed that in February this year, where home centre in Mount Hargen moves out of there into the new building. We demolish the old building and then we'll move out of the warehouse and into the new building. So stage 1 was completed in February. Stage 2, we're undertaking the demolition and reconstruction of the home centre this year. It should be complete by probably mid next year. And so that's a fairly large capital project. The other one is we're likely to rebuild our Goroka home centre business within the next 18 months as well.
Right. So what is driving the growth? Obviously, the economy itself is not growing at almost double-digit figures. So is it about market share, or where are you seeing that growth coming from?
I think for us, it's really about establishing the future. So, the old saying, build and they will come. It's not quite like that. We know that those markets are very solid for us at the end of the day, and the current facilities, have been stretched for quite some time. So the reality is that, we need to, beyond investing in Port Moresby assets, we need to look at the regional footprint and work out, what's the right capital spend in those markets. Goroka and Mount Hargen present, really good options for further growth, particularly given the coffee market and produce in Goroka. And as you know, Hargen draws from a much wider sort of, base, if you like, and 60% of the Papua New Guinean population live in the highlands at the end of the day. So they're sort of two natural fits for doing something in those locations for us. And I think having a bigger footprint allows us to invest more in the categories that we have, and ultimately, I think the signs are there that we'll deliver growth, regardless of the size of the operation that we have there.
Excellent. Is there anything else we need to cover as far as your plans for this year?
I think most of it's probably in that, doing things a little bit better, making sure that our supply partners, and that's probably a big piece of the success of 2021 is going to be, Andrew, is in shipping and supply. So
yes.
We're already experiencing challenges in China and other parts of the world. There's a shipping container shortage as a consequence of COVID. So all of those elements are pretty challenging to manage in the background, but we've got, significant relationships in place. And while some of those will come under pressure this year, I think the focus on 2021 for us will still be in that value proposition. We're trying to find products and categories that we can reduce our retail price in by getting a better buy, from China or other parts of the world, ultimately. And that's our mission for 2021.
Well, that's just about it for us for today. Our sincere thanks to Ilyas Sarsenov, to Paul Barker and to Douveri Henao, and also to Cameron Mackellar, 4 very busy men, so thank them very much for their time. Thank you for your questions and comments. We will circulate these afterwards, but I've also drawn their attention to Paul and Douveri, and they may jump in the session and answer them during the session that we're doing now. Our sincere thanks again to our sponsor for this morning's event, KPMG. Our thanks to them for their sponsorship of this event. This briefing is one of a series produced, which is also hosted on our YouTube channel. So if you want to see previous sessions that we've run, you can do so by going to that channel. And this will also be posted on the channel as well. If you want to keep up to date with what's going on in business in Papua New Guinea, go to businessadvantagepng.com for all the latest. You can sign up to our regular newsletter, which goes out twice a week, to anyone who wants to receive it. Well, that's it for today. I hope the rest of your day is productive, and we'll hope to see you next time, and may your business have the advantage. Good morning.